The chart looked dead for weeks, then suddenly Shiba Inu snapped a line everyone had given up on. A key trend line finally broke, volume flickered back, and traders stopped scrolling past the chart. Analysts are rechecking their models. Whales are quietly watching. But does this breakout really mean the bulls are back, or is it just another cruel trap before new lows? Let's break it down properly for Shiba Inu. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. Recently, Shiba Inu spent most of October and early November grinding lower after losing the psychologically important 1,000-unit region, slipping into the 700-800 unit band as broader meme coin sentiment cooled. Daily candles showed a sequence of lower highs and lower lows, confirming a downtrend as intraday spikes kept getting sold and liquidity chased newer speculative stories. At the same time, flows rotated into fresh projects, with some holders cashing out of older memes and hunting pre-sale gains elsewhere, a classic sign of fatigue. Meanwhile, the Shiba Inu ecosystem kept shipping rolling out privacy-focused upgrades, expanding its Layer 2 ambitions, and quietly working on infrastructure that goes beyond pure hype. Going into the last week of November, the market was caught between a soft fundamental story and a harsh technical reality. Then came the break. A widely watched descending trend line that had capped every bounce since October finally gave way as Shiba Inu printed a convincing green candle through that resistance. Intraday, the token jumped a few percent, retesting levels it had failed to hold in earlier sessions. This time, the behavior was different. Instead of sellers immediately slamming price back under the line, buyers defended the move into the close. The breakout also arrived while Bitcoin was enjoying its own relief push to fresh local highs, turning the Shiba Inu move into part of a broader risk-on wave instead of a lonely spike that could be dismissed as noise. For the first time in weeks, the chart started to look alive. Right now, live market data shows Shiba Inu trading around the mid-800 unit region, with daily performance in the green and weekly performance still slightly negative. Market cap is sitting a little above $5 billion, with 24-hour volume in the mid-hundreds of millions of dollars, suggesting that while this is not a euphoric surge, it is not a weak, illiquid bounce either. Looking back over November, earlier candles struggled to hold above 900 units, with each attempt turning into another lower high. The current structure where price pushes back through resistance and then holds it marks an upgrade in buyer behavior. Forecast pieces focused on this period have also started to adjust, pointing to possible short-term recoveries in the low four-figure unit band if the recent low holds and momentum normalizes. Under the surface, on-chain and derivatives data help explain why this break might matter. In the days leading up to it, leverage had been steadily drained from the system. Futures markets showed outflows and negative net change across multiple timeframes as overextended long positions were flushed and defensive positioning took over. That sort of cleansing often clears the way for more sustainable moves. Meanwhile, spot flows had begun to shift from aggressive dumping to more cautious behavior, with some tokens leaving exchanges for long-term storage. Historically, for Shiba Inu, that combination reduced leverage, softening selling pressure, and a big technical level overhead has been the backdrop for at least tradable reversals. Broader technical context from this year also matters. Earlier, Shiba Inu had already proven it could exit corrective phases by breaking out of larger wedge structures and defending key support bands. That established a kind of playbook: grind lower, compress volatility, flush leverage, then break. The new trendline breakout fits neatly into that rhythm, even if it is happening at a lower absolute price level than some optimists had hoped for. Analysts following this move see it as an important first signal rather than a final verdict. Short-term outlooks talk about the possibility of Shiba Inu reclaiming higher zones in the 1000 plus unit region if the breakout sticks, especially if Bitcoin avoids a sharp pullback. More medium-term projections, however, stay modest, suggesting that without a real uptick in Layer 2 usage, burn activity, and ecosystem traction, returns could remain moderate rather than explosive. AI-driven scenario models add another layer, mapping out cases where, under stronger adoption and friendlier macro conditions, Shiba Inu could deliver much larger upside by late 2025. But those same models also stress how sensitive the path is to liquidity cycles and investor attention, both of which can reverse quickly in a meme-driven sector. Community reaction reflects this mix of excitement and caution. Traders on social platforms are sharing fresh charts with the broken trend line clearly marked, pointing out that Shiba Inu is also breaking out alongside other majors. Chartists highlight the clean diagonal break, the improved intraday closes, and the subtle shift in volume. At the same time, long-time holders and more conservative voices warn that the token has produced fakeouts before, and that a single breakout is not enough to erase months of lower highs. Builders and ecosystem supporters, for their part, continue to emphasize development milestones, privacy improvements, infrastructure upgrades, and the slow burn impact of Shibarium as reasons the project can still justify attention even after hype cycles fade. Looking forward, the near-term roadmap for traders is fairly clear. In the next week to month, the crucial questions are whether Shiba Inu can keep closing above the broken trend line, whether the 800-unit region flips into a reliable support zone, and whether volume remains healthy rather than collapsing back into apathy. If those boxes get ticked, technical targets a bit higher up become realistic, especially if the wider market stays constructive. Over the next 3 months to 3 years, the focus shifts more toward fundamentals. Network usage, real-world integrations, token burn efficiency, and the broader macro cycle will decide whether this breakout becomes the first step of a larger accumulation phase or just another interesting blip in a long consolidation. Investors also need to keep one eye on competitive risk. Capital in this market rotates aggressively into new narratives, pre-sales, next-generation meme tokens, and AI-labeled plays can all siphon attention away from Shiba Inu even when its chart looks technically sound. If that rotation accelerates, a solid breakout can still underperform other high-beta names. At the same time, conservative forecasts remind everyone that a gradual, mid-teens style return path is entirely possible if the project grows steadily, but not spectacularly, especially in a more mature crypto cycle where extremes get dampened by institutional flows and tighter regulation. So the balanced conclusion is this: the broken trend line is real, it matters, and it finally gives bulls something concrete to point to after weeks of grind. But it does not cancel volatility, it does not guarantee a moonshot, and it does not replace risk management. A single broken line is an invitation, not a promise. From here, every retest, every volume spike, and every macro headline will help decide whether this becomes a genuine trend reversal or just another chapter in Shiba Inu's long story of sharp rallies and equally sharp corrections. A single broken trend line will not decide Shiba Inu's destiny, but it has woken the chart up again. Bulls finally have a real argument, bears still have plenty of levels to defend, and every candle from here matters. Watch support, watch volume, and never ignore risk. Because when Shiba Inu truly chooses a direction, it rarely walks there slowly. It usually runs, and sometimes it sprints, often without any warning. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.